Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market simply balanced within a range, and on the larger time frames, the buyers are currently in control. So off the open, we have these support levels at Friday's low, 13 quarter, and the overnight low at 12 quarter, and then initial support at 2109 to 2111. Now, given where all these markets are trading, the Russell is really the one that is at an important short-term inflection point. So I think the direction in the Russell can provide a heads up on where ES and NQ may be heading. So if you do watch the Russell, keep an eye on the 1237 to 1239 area. Holding that zone and then breaking out to the upside would confirm buyers in control, and that can lead to a move up to 2121 to 2123 in the S&P, and potentially even a new all-time high, depending on just the level of broad market strength, momentum, and volume that we see once the market opens. On the downside, the main thing we have to be cautious about is a failed breakdown setup, because the larger time frames are bullish. So even if we head lower from here short term, the market can still reject the 09 to 11 area in the S&P, and 2108 is also a important support level. So on the downside, even though we can head a bit lower, because there is short-term support and 09 to 11 is an important inflection point in the S&P, there may not be enough downside potential to really warrant any short setup, especially at aggressive prices. When the larger time frames are quite bullish the way they are right now, then typically any breakdown attempts tend to fail, and the market quickly reverses back up. So right now, given that we're trading near a short-term swing low, the risk is still more on the sell side, that shorts can aggressively get in and get trapped. So unless Russell is purely just liquidating and there are strong signs supporting a downside move, the focus is still going to remain on long setups. Perhaps then we'll be a little more cautious on the long setups, but I think shorting this market right now is still a bit risky. And again, unless we're seeing just some very clear-cut signs of more of a trend down type move, it's going to be better to stick with the long setups and just exercise caution on the short side, just because the larger time frame buyers can step in at pretty much any zone here. And with 09 to 11 and the 2108 level being very key, and then just push the market right back up towards 2115 quarter and the 19 gap, and then 21 to 23, which includes the all-time high. So at the moment, those larger time frames are still maintaining control on the buy side, and the buyers can still step in at pretty much any spot here and push the market back up. As long as, again, if the Russell's holding 37 and 39, that is a short-term inflection point in TF, and if we can use that, if that ends up being a launching point for an upside move, then it would just confirm the buyers in control, and that can lead to some buying in the S&P and Nasdaq as well. Now on the upside, if we break out above 21 to 23, the 27 quarter is a level where the short-term range could get exhausted. 30 quarter, 32 quarter is another area where on the upside the range would be exhausted in the S&P. So above the initial resistance zone, there is no hard resistance in the S&P. That's uncharted territory, fresh all-time highs. So the only thing we can really rely on to gauge how far the S&P may go is the current level of volatility and the range potential of the day. At the same time, the other markets can also serve as a reference point. So for example, if the Russell is heading into resistance as ES is trading near 27 or up near 30, then that can also be a timing mechanism to get out of any long setups. So in the Russell, for example, we have short-term resistance around the 48 to 50 area. So first push into 48 to 50 can attract sellers in the Russell, and that can limit the upside in the S&P as well. Beyond 1250, we have resistance at 53.5, and then another high volume node at 56 in TF. So again, these other markets can serve as just a timing mechanism to enter and exit trades in the S&P, since these other markets haven't hit new highs yet, and they do actually have clear-cut resistance areas as they move higher. So keep an eye on TF and NQ. I think they will provide a heads up and some levels that you can use just to time the trades in ES. But overall, the buy side is still in control, bigger picture, and even though in the short run we may get a little bit of a pullback, just because we are trading near support here, the overall picture still supports long setups, and we still have to be cautious on the short side. So those are the main ideas heading into the open. Let's see if the buyers can maintain control and hold ES above 09 to 11 today, and we'll take it from there.